Three key fundamental things to watch out for this week, guys. Number one, tonight's RBA meeting should be quite an interesting one. I actually did a blog on it last week, so if you want to see my preview in more detail, I do suggest you go back and have a read. But pretty much in a nutshell, all of their policy measures are going to be held. Okay, so interest rate's going to be held at 0.25%. Yield curve control program is going to be held as it currently is. Basically, it targets 3-year Australian government bonds at 0.25%, basically the same as the interest rate. The reason they're doing that is just to ensure that the Aussie government can borrow money cheaply. The interesting thing that we want to know is, what are the RBA thinking when it comes to the strength of AUD? Do they not mind it being strong? Because that is something that Governor Lowe has said in recent weeks, that there's no evidence of AUD being overvalued, but some other board members have spoken about how they wouldn't like AUD to strengthen much further. So are we going to see the RBA try to talk down AUD like we've seen other central banks do, such as the RBNZ? Could they follow in those footsteps? So it's that issue that we'll see AUD volatility on tomorrow overnight. What's the next thing we're looking out for this week? So on Friday, the other key scheduled economic event that we're looking out for is Canadian jobs data. Now, just like with the US, we had data a month ago, and that data was for May. And it was really, really strong in Canada. We unexpectedly saw, I think, 290,000 jobs added to the Canadian economy. Expectations were for I can't remember exactly what the expectations were, but it was like 1 or 2 million jobs to be lost. So it's a massive beat on expectations, just like in the US. And just like in the US, we're seeing if the Canadian jobs market can maintain that positive momentum going into June, because this data is for June. Obviously, as always, if the data is stronger than expected, that should be CAD positive. If it's worse than expected, that'll be a CAD negative. Now, the final thing, number 3 thing that I'm looking out for this week, this is a theme that's going to be going on all the week. We're already talking about it today. The COVID-19 outbreak in the US, but also globally, but mainly focused on how the outbreak is going in the US. So over the weekend, we saw continued record rates at which this virus is spreading, right? Like the numbers coming out of Florida were just, oh God, it was like more than 10,000 a day, pretty much every day for the last 5 days. Not good. But the interesting thing, guys, is equity markets, not just equity markets, but just general risk sentiment has held up really well despite this second wave. Like when you look at stocks, when you look at AUD, NZD, a lot of these risk assets, they're not far from the highs we saw back in May before these second wave concerns really got kicking off. One of the things I think a lot of people have been pointing at is the fact that cases are going up in the US a lot, and they have been for more than 3 weeks now, but deaths are still quite low. Why is that? Some people saying the virus is less deadly, other people saying treatments got better. But the thing is, if deaths don't start to rise, then what are we all panicking about? Do you know what I mean? What we were panicking about before was this virus killing hundreds of thousands of people. But if the virus isn't really killing as many people, we don't really need to worry so much about this second wave. Obviously, guys, who knows? I'm not a scientist when it comes to, or an epidemiologist when it comes to this kind of stuff. But what happens with deaths this week and the rest of the month is going to be really, really key when it comes to risk sentiment. Something to look out for. That is pretty much it from me for now, and I'll see you in the next one.